the thing that I wonder about, Bill, is all this discussion and what John and I speak of every day on Bloomberg surveillance is the rationalization of a new terminal rate. Michael Feroli at JP Morgan and others have been very good about this. Goldman Sachs had a house call of lower GDP, way out front of many others as well. Is all of this a rationalization within our greater financial system to get to a new nominal rate, a new terminal rate, a new real rate, and indeed a new unemployment rate that's just a different statistic from our childhood?
Well, that's very much it seems to be the case, that the real interest rate consistent with a neutral monetary policy seems to be distinctly lower today than in the past.
In your head,
if you look at the old Taylor rule formulation, the real interest rate that was considered sort of neutral was 2%. Now people think the real interest rate that's considered neutral is closer to, maybe 0 to 0.5%. If you look at the summary of economic projections that the Fed publishes, their long-term nominal federal funds rate that they expect, the median is 2.5%. So 2% inflation plus a 0.5% real rate. So that's much lower than it's been in the past.
Where's your run rate on real GDP, and how much is the president affecting that with his trade war?
It's hard to know precisely how much the trade uncertainty is cutting off growth, but we know that it's definitely having negative consequences for investment spending. And as we go forward and tariffs continue to get ratcheted up, it's actually going to bleed over into the consumer as well, because tariffs are a tightening of fiscal policy.
I'm very pleased to say that you think the neutral rate is 0 to 0.5%. At least it's still positive. We're getting a lot of questions from our audience about the prospect of negative interest rates. We have them in Denmark, we have them in Switzerland, across Europe, in Japan as well. Is that something you could ever see working, just operationally working here in the United States, Bill?
I think you could operationally do it, but I think that you saw the Fed did not go down that path in 2011, 12, 13. And I think the experience with negative interest rates around the world has probably been pretty mixed. So I think the bar for the Federal Reserve ever contemplating negative interest rates in the U.S. is really, really high.